Well, top of the morning to you folks out there. So thanks for joining me today. So mortgage rates went down a little bit today. What we're going to do is we're going to talk about what's going to happen when the war ends. So that's our topic for today. But before we get there, I usually like to start my day with the chart. But today I just want to say rest in peace to my brother-in-law. He passed yesterday. It was a wild day yesterday. Let me just share my day with you yesterday. So yesterday was my oldest son's birthday. So it was my first child. He was born 34 years ago. Yesterday, my middle son, his wife had a newborn baby. So we had a newborn yesterday as well. And then my Mark here, he's been my brother for, well, I've been dating my wife since I was 15 years old. So I've known him since I was 15 years old. And so rest in peace, my friend. We'll miss you. So without further ado, folks, let's get to today's news. You know that I like to start with the chart. So today it's pretty darn good. We got up 17 points. We're going to come back to this at the end because all you need to understand, if you're watching this channel, you have to be either a mortgage person, a realtor, or you're looking to buy a house, or you're looking to maybe refinance. Who else would be watching a mortgage channel? But let's get over to these things. All you have to understand, ooh, that was a bad move. So this right through here, if the number's green, that's good. You see how the numbers are moving? This is what it does all day long. It's like a stock. So when you question, okay, how often do mortgage rates move? Heck, they can move throughout the day. So all you have to understand is that number up through there. If it's green, that's good. That means the rates are going to get better. If it's 10 or more, that's when you really start to see the markets moving. We'll come back and kind of dissect this in a little bit. But the first thing I want to go over through here is what's going to happen with rates when the war ends? Because basically, if we were looking at rates before the war, you realize they were at 5.99. 5.99. I thought they were going to go to 7%. They still might go to 7% if this war goes, keeps going on and on and on. So what I want to show you guys is we do it every day, but I want to show you how oil prices, how they've rallied. They're up about 60% in the last 3 months. So when you have the commodity that's most used in basically everything we use, if it's up 60%, what do you think the prices of everything's going to do? So here's what's happening right now. Oil prices since the war, they're up 58%. So what happens is the price of oil goes up, okay, right through here. Gas, shipping, food, business costs, everything goes up. Okay, so what does that mean? Inflation risks are going higher. It means we have to pay more for products. Okay, so what the Federal Reserve would do in a normal situation when we have higher rapid inflation, they would start to increase rates. Well, they really are in a tough spot right now. President Trump is swearing in a new Fed president today. His name is Warsh. Everybody thinks he's going to cut. He's not going to cut. Okay, so here's what's going to happen. The Federal Reserve, they're stuck because inflation's way too high. But what's going to happen when the war ends? That's the question. So bond yields right now, they're skyrocketing because inflation rates push up yields on everything. So we won't go down in the woods on this one. Let's get over to here. Let's see how the markets are doing. So oil prices, they're up $1. This isn't good news, but the good news is this was 112 a couple weeks ago. So if you have oil coming down, that's basically what's controlling the market right now. We also have earnings reports that are coming out doing very well as well. Let's see, what's up? President Trump defends funding after Senate Republicans, whatever. We'll go through that. So let's see what the pre-markets are doing. The markets are up again. So let's see if this is a Cinderella story other than oil, because oil is off its peaks. What I call a Cinderella story is basically this. If you are investing money, you probably are buying stocks or bonds or mutual funds, things like that. So what you do is you buy a stock and hope the price goes up, right? And that's what you most likely do. Well, you can make money also with prices going down. Check out a video I did yesterday about the house crashers. They were predicting housing market's going to crash. So you can actually short these stocks. If they shorted the builders, how'd they do? They didn't do very well. But here's what we look at. Oil prices, they're up a little bit, but they're down basically over the week. So we're going to look at the rest of the things. Pre-markets, we got the Dow Jones, the S&P, and the NASDAQ are all up. So if you bought stock, you're probably making money. Oil, yeah, oil's up just a little bit, but we got 10-year Treasury down. The yields are down. Let's go to crypto. It's not a Cinderella story. If this was up, I'd say it's a Cinderella story. So this is telling me little risk on right now. So here's my prediction. I didn't think the markets would rally this much today. You might see it all come back. We'll get to that in a second. Here's my thoughts. We're going into a weekend. The President Trump just came in. He came in yesterday and said, okay, we're going to maybe bomb Iran. No, we're not going to bomb Iran. I think we got a settlement. And that's coming in every day, one way or another. So now we're going into the markets. over the weekend. And could there be a war? Could there be a strike? Could there be a settlement? Markets, nobody knows. And it's a holiday weekend, so Monday, banks and financial institutions are closed. So bond traders and stock traders can't do anything. If I'm a trader, I'm kind of getting out of the market, hedging my bets for the weekend because I don't know really what's going to happen. So that's my thoughts. I'm thinking the MBS markets and the Dow Jones and everything might settle down. Maybe not the Dow, but I'm thinking the bond yields will. So let's get over to here. I know I do this every day, but we have to focus in on what's causing rates to go up. Okay, so it's this data over here. So this is what the Federal Reserve uses to figure out what's going on with interest rates. Okay, they control the federal funds rate over through there. Check it out. It's pretty neat. It's only interbank lending. But they look at and they monitor the PCE. That's the inflation number that they monitor. Well, we got that number coming in next week. We're going to take a brief look at that because next we're going to look at what economic news we got this week that's really monitoring these things over through here, and then what's coming next week that should be swaying the markets. So right now, inflation, it's high and it's continuing to go higher, okay, as oil prices keep moving. Then you look at the unemployment rate, it's been sticky right around 4.3 for about 3 years. So that has the Fed thinking, okay, the jobs market and wage growth is okay, but we have inflation out of control. They usually increase rates during this time. But here's what it is right now. Here's what's happening in the markets. This is oil prices. Okay, so here's what we had oil over the last year. Okay, so back here, I just want to show you how low oil was for long. Okay, so oil prices were $61 a barrel in 2025. If we go further out, they were way high. If you look through here, look at oil prices in 2022 are $120 a barrel. That was when inflation was like 8. Okay, so now you see the correlation there. But let's just go to a 1 year. You can see where it's been basically between $60 and $70 a barrel for the past year. Then all of a sudden what happened right here? The Iranian conflict, and oil prices skyrocketed. Well, oil's in everything. Just think, you're going to travel this weekend, most likely you're going to be driving. Filling up that gas tank is going to be brutal. So this is what's pushing up the prices of everything. So let's get over to the economic news. Here's what we got this week. So we're going to look at jobs. We're going to look at inflation. We'll look at some other things because what we're trying to figure out is the economics behind, okay, once the war's over, and the oil prices, they'll retreat. They're going to go back to 60. I'm not sure about that. But as they retreat, the inflation pressures are going to come off and rates are going to come down. But when's it going to end? So from there, let's start looking at the technicals, see how things are. Remember, we're going to look at inflation and jobs. So we go to Tuesday of this week. We got the ADP payroll numbers. The last reading was 33,000 jobs were created in the previous week, 42,000 in this past week. That's a great number. Okay, you go down through here, ADP, we won't look at oil. Here's something interesting or not good. If you look at the 20-year bond auction, this is because our government doesn't have enough money, so they have to sell bonds. You and I put it on credit cards. Well, they have to sell, I don't know how, but this was a record amount of bonds that they sold in the last 60 days. Last time they sold a bunch of bonds, it basically they were able to sell those at a yield of 4.8%. Now, investors are saying we need higher yields. We need 5.12. Why? Because inflation's going up. This is why investors are requiring higher yields because inflation's going up. Higher yields mean higher rates for mortgages. That's how this all coordinates. Then you go to Thursday. We had building permits. They came in pretty darn good, actually shocking me. But what we look on Thursday was initial jobless claims. What does the jobs numbers look like? Well, they actually look pretty good right through here. 212,000 people lost their jobs at the last reading, 209 this time. It was right in line with expectations. But what I like to follow is continued claims, because if you lost your job, okay, that's bad enough. But are you able to get a new job? So then basically the net number to the government and the unemployment numbers is basically zero because you're able to get a job pretty quick. So this is telling us, well, people are able to, the numbers stand steady. So if you got let go, people are getting absorbed back into the market. Okay, so that's what we got that day. And then Friday, we got nothing really today. So let's skip over to what we're getting next week. Okay, so here's the numbers. Memorial Day will be shut down. I will not be doing videos. But on Tuesday, we're going to get this thing called S&P/CS. What is that? Well, this is home prices. What are home prices? What have they done? So this is the Case-Shiller Index. So this is interesting. Like I said, I posted that video yesterday about house crashers. They're completely wrong. They've been wrong, and they're going to continue to be wrong, but you guys keep watching them. Still baffles me. But the Case-Shiller Index, here's what it's saying. Month over month, home prices, they were up 0.4 last reading. They really didn't give us an indication this time. But year over year, they're saying the last reading was 0.9. Home prices are going to go up about 1%. I've been calling that this year. I called it last year. I called it the year before. I'm like, home prices are going to be completely flat. Now, what you're going to see, you're going to have all those people cherry picking. Well, Austin's it's down 25%. How about a couple places in Florida? Well, yeah, but in general, if you look at the whole market, it's up 1%. So if Austin's down 25%, well, there's another market up 26% to offset that. Just interesting think there. So that's what we're thinking. Home prices are going to just be stable from there. Then we're going to get ADP payroll numbers. I'm going to keep monitoring this because their numbers keep getting a little bit better every time. So they're saying 42,000. They're not giving us their expectations. But then here's where the numbers come in. Here's the data that the Federal Reserve is going to watch. And remember, we got a Federal Reserve meeting coming up in June. So let's look at what's over through here. So we're going to get, what's this? Continued claims, initial claims. We're going to get the continued claims and initial jobless claims and continued claims on Thursday. We get those every Thursday. But we're getting this Thursday, or next Thursday, is the PCE. Remember that PCE number that the Federal Reserve watches back through here? The PCE? Okay, so let's get over there. So here's what they're looking. They're going to give us several numbers, and it might be confusing. You're going to see core PCE, core PCE, core PC. Why are there so many? Well, if you look at this is saying year over year, this is saying month over month, and this is Q1. Okay, so core means they stripped out energy. They strip out food too, but the energy component of this is really crazy. So if you look at this, you're thinking, okay, if it strips out energy, these numbers might not be all that bad. They're going to be inflated, but they might not be all that bad. So they're saying, well, the Q1 PCE is 4.3. Well, it's going to stay at 4.3. I'm not quite sure that. I could see that ticking up a little bit more. They didn't really give us any of the predictions on those. We're also going to get the GDP. That's another thing that the Fed watches. Then you're going to see here, PCE. Well, what happened to core? Well, what happened to core is they added it into this one. So this one now includes food and energy. Well, this thing could be huge because remember when we looked at oil, it's up almost 60% in the last 3 months. So you're expecting, okay, if we throw oil into the mix, well, how bad is this inflation number going to get? So let's go here. They're saying it's 3.5 year over year. They haven't given us a prediction. I'm going to say this could hit 4s. And don't be surprised. The markets might eat it up in a good way, but it seems how mainstream media looks at it. So we're going to get year over year, month over month right through there. Then we're going to get a whole slew of other data, and it's going to come through, but that's the most important information we're going to get next week. So if we combine all this together, let me put you in the catbird seat. If you're sitting on the Federal Reserve, what are you doing? Are you cutting rates? Are you going to increase rates? Are you going to just stay steady? My vote is, well, let's go over to see what the Fed's going to do. So we go to the CME FedWatch group. This is actually a report that Chicago Mercantile Exchange puts together, and I've been reviewing this for years. A lot of people are starting to watch it now, but if you go down through here, this thing in 26 days, Federal Reserve is going to be meeting. What are they going to do? If you go down, there's a 99%, there's basically a 100% chance they're not going to do anything. Now, people are saying the Warsh, remember, we have a new Fed president being sworn in today. They're saying he's going to cut. Folks, he ain't going to cut. He's not going to cut until we see oil stabilize, the Iranian situation basically conclude, and oil start its retreat. Then the Fed's sitting there, and they even said this at the last meetings. They're like, okay, we know the inflation right now is really predicated on oil. So now we go back to our conclusion at the front. Where are rates going to go once the war is over? Well, let me get to that for you. So let's get over to what's the section I like to call lock or float. Okay, so if you're out there, you're looking to buy right now, or you're going over the weekend, I had several people reaching out to me yesterday. They need updated pre-approvals. So people are out there looking this weekend. I had one guy looking at 5 homes yesterday. So there's a lot of contracts probably going to come in this weekend. So what are you doing? What should you do? Okay, so make sure you reach out to us. If we've already got you pre-approved, or reach out to your loan officer. Make sure you get that pre-approval, or make sure you get the numbers based on rates at maybe 7%. Why 7? Well, if you can afford a house at 7%. If rates go to 6.5, it's going to even make it a little more affordable. But if you can't afford it at 7, you might want to reevaluate things, because you realize next year your taxes are probably going to go up, and your insurance is going to go up. That payment's going to continue to rally. So be careful when it comes to that. So also be careful when looking at adjustable rate mortgages. We'd like to coach you through this process. So be careful when you get a house under contract. Make sure you lock it in. Now, if you're looking to build or buy, maybe in the later part of the summer and the fall, what should you watch? Watch oil. Subscribe over there. What I'm going to come in every day and explain to you guys is what's going on, the whys behind it. Folks, my name is Dan Frio. I'm actually a licensed mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. My slogan's one application, one credit pool. We're going to compare your loan to over almost 40 different lenders. That's what I do for a living. Love to help you out if you're looking to buy, looking to refinance. So if you're looking to build, we'd love to help you as well. We have a one-time close program for that. We can coach you through that. But now you're a homeowner thinking, okay, what do I do? Rates were 5.99 before the war. They almost went to 7%. How do I monitor this stuff to get basically some help? Well, go to my channel right through here. We have a store, actually. All this stuff is free. I'm not trying to sell this. I'm trying to help you. So we have yesterday or 2 days ago, I put in, what is my true payment simulator? What would be your real payment? You ever go to those calculators and you go in and it just doesn't really make any sense, or it's completely generic? This one you can actually customize, get actually down to the penny on what you can afford, and it'll actually provide you, if you know your credit scores and all the details, you can actually get what your real mortgage rate would be. And if you like it, you can click the button, reach out to me, and we'll lock you in and get you started. But let's get over to those out there that are sitting there as homeowners. What do you do? What are you advising your clients to do if you're a mortgage loan officer out there? Here's what I'm telling my people to do. Make sure we're ready. You know how we married the house and dated the rate? Okay, so did you miss it last time? Well, don't miss it this time. Here's what I created up through there. It's called RateWatch 2.2. For homeowners, put your mortgage information in there. We're going to track two things for you. We're going to track the rate. What happens is many people got a rate, you're probably still out there too. You might have a rate at 7. You were waiting for 5, never came. Well, what I did is that's what our chart used to do. Now what it does is you can go in there and say, Dan, okay, when I save $300 a month, $400, $500 a month, reach out to me. You realize when rates hit 5.99, we had almost a quarter of our portfolio actually trigger. We couldn't even keep up with it. So make sure you put your information out there if you're a homeowner. But let's go to see if we have any questions out there for today. Whoa, we got a slew of questions. So what do we got here, folks? So I appreciate you guys being with me today. This is going to make it a lot easier to go through this channel. Before we go, I'm going to go back to the chart because we want to end there. So I want to go over here. I'm not going to, let me post some of these. I'll just watch them on the side. Yo, bro, just wanted to show you some real love from your stream because you've generally got crazy potential, and I'd love to connect with you at top Twitchers, streamers. I'd love, whoever you are, reach out to me. Send me an email. My email is Dan at therateupdate.com. So thank you so much. I got Hector, thanks for joining me this morning, my man. Buyer, you're a buyer out there, so reach out to us. Or if you've gotten pre-approved, here's the only advice I can advise you. Reach out to us. We like I said, we're licensed in all 50 states, so we can give you a quote up to almost 40 different lenders. Make sure you realize or get with your mortgage advisor and figure out what those rates would be, or the payment would be at a rate maybe 0.25%, 3/8 higher than what you got pre-approved at. Okay, just do me a favor with that, because your costs over the next few years, they're going to go up, and you're going to get into that house as well. And there's utility bills are going to be a little bit higher than you thought. So make sure you're careful when you're getting that house. So thanks for joining me today. We got John. I'm not going to post these up. I apologize. You might not want to be seen on screen, and a lot of these are long. So thank you. Rest in peace, Mark. Happy birthday to your son, and congratulations to the new additions. Fingers crossed. Resolution in me. Oil dropping and rates falling. Rate lock on my new build earlier in August. Let me see. Rate dropping and rates following. Rate lock on my new build easily August. John, reach out to us or subscribe. I'm going to come in every day and explain to you guys if you're not closing in August, hold off. You're good. Just keep in touch with your mortgage advisor if you see rates spiking. But even if you went to lock, don't lock in. August is way too far out. Here's how locks work, just so you know. Locks are predicated on like 15-day increments. So how a lock works is you lock in the rate, okay, and you have to close within that time frame. So you lock either 15 days, 30 days, 45 days, 60 days. What locking is basically you're saying to your lender, okay, I'm good with that rate. I want to lock it in. We're good. Okay, so that's what happens. The longer the duration, the higher the rate, okay? Because as a bank, we have to hedge that money. So a 15-day lock is cheaper than a 30-day lock. 30-day lock is cheaper than a 45-day lock. So try to squish that down as quick as much as you can to a 30-day is usually when we start locking people in. But thanks for joining me today, and I appreciate it. Do you think Spencer Pratt will win in, I don't want to get into the election stuff, but out there in California, you guys vote the way you guys want to vote. All I ask you to do is do your due diligence. If they fit the role models that you want, but please don't be just blindsided by mainstream media. Dig into your candidates. Figure out what they stand for. Do you have the same beliefs as them? Don't just say, I hate that guy, So I can't vote that. Make sure you kind of line up with these things and then vote the way you want to vote. So I appreciate you joining me today. But what do we got? We got another person. Spencer Pratt is running great campaign, but it's a blue state in LA. If the polls start swinging that way, chatting will help. Okay, so we got Startler. I don't think anyone believes the jobs numbers anymore. What was the revision for the previous month? What happens every once in a while, I'll put this on the screen, is they'll do an update. If you look at, I think the last reading and last time, it was kind of, when you're going through it, it was like, they gave us two numbers. It's kind of weird. Well, what they did is they gave us a March and an April number, because what happened is the government was shut down. Remember we had that like 80-day shutdown or something like that. So the data wasn't released. I watch, you don't have to, I guess I get this comment a lot. I don't believe that, and I don't believe this, and I don't believe that. Well, what can we believe? So this is what I try to do. I try to give you data from the government. I try to give you data from the ADP, and then I try to give you my projections are, forecasts on all this data that we get. So I've been doing this. I'm not saying I know exactly what's going to happen. I don't. I was on homes.com. They called me the other day for an interview, and I posted it yesterday. I'll try to post it down below so you guys can see it. And her comment was, what are you telling your clients right now? What are you telling your clients about, should you lock in, where rate's going to go? And I'm like, I don't know. I'm like, that's not the answer that you want. But everybody that comes in here and says, oh, this is what's going to happen, this is going to, it's a guess. It is a complete guess. We don't know. We don't know what's going to happen tomorrow. I didn't know yesterday I was going to have a newborn, a death in the family. So you don't know what's going to happen. So I like to be honest. I always tell my kids, if you're any of my kids and you're on here, please let me know. It's okay to say you don't know. Okay, but then find out, or try to at least educate people on the things that you can know and at least guide them with. That's why the crashers drive me crazy. They've been saying that the housing market's going to crash since 2022. Housing market's been pretty flat. Rates are down from 8% to 6.5%. So why is housing really unaffordable? And that's all you hear on the mainstream media every day. Why is it unaffordable? I come in and I say, it's taxes. It's insurance. Yeah, home prices are high, but I don't really see a housing market crash. So that's my take on a lot of those. But thanks for joining. Let's see what we got over here. We got Joel. Joel, I agree. Those jobs numbers are tough to believe. I agree with you there. We got Statler. Mortgage rates back under 6.5. Steady new chair. If rates go under 60. Here, let me see if I can get some more. Wow, you guys got a ton of questions in here. Let's see. If rates go under 6%, will those on the sidelines hop in? Let's bring this one up. This has kind of been interesting. And this is what actually homes.com asked me. Hop in thinking instability, secure folks, aka not guaranteed rates will drop to refinance on the sidelines. Yeah, there's a ton of people. Here's the best example I could give you is the RateWatch tool we have up on the screen. There's thousands of people in there. On the day that rates hit 599, most of the data we had at the time only was tracking people's rates. We had a quarter of the data trigger that day. So a lot of people were wanting a rate at 599. It's just that psychological number. It's like how when you sell gas prices, they don't tell you it's $6. It's 5.99999999. So it looks better the 599. So that's why you see a lot of these things. But it's going to be a massive amount of people refinance. I can almost assure you. The tough thing is a lot of people are stuck right now. They have a lot of debt, and they have a rate on their primary mortgage at like 3.5%. They're like, this doesn't make any sense. I'd love to be able to maneuver my monies to pay off my debts, but I can't really afford to pay off a 3% rate. Well, there's tools in here. I didn't even realize I was going down this. True debt consolidation calculator. This actually will tell you, it's AI. It'll just mathematically tell you what's your best option. And it's going to give you options such as refinancing the first mortgage, just doing a home equity loan, doing just a regular second mortgage. It's going to tell you exactly what to do, and use the math to make the decisions. Don't let me talk you into it. You're a loan officer. Have the math direct you in the right decision. So let's see if we got any more. You guys are lined up, and I truly, truly appreciate it. The second it drops under 6, the floodgates will open. People are waiting on you got it, Joel. Accelerated lending will be unstoppable. Okay, so let me announce something today, folks. We will be partnering with the Accelerated Lending Group. We all work at the same bank, but we're actually joining forces right now because they have technology that is beyond belief, and we have a good following on with you guys out there. So we're partnering together. We're going to have about 6 or 8 people that we're training right now as loan officers, and so expect big things coming up. We're actually going to have a studio and a whole bunch of other things, thanks to Joel and his team over through there and a lot of other people out there. So let's get to the next one. Thanks for joining in today, Joel. Join in every morning, buddy, so you can figure out what I'm talking about in the mornings. What are the rates for USDA? Well, let's go over. Let me see if I post these on my rate sheet. So if you guys are on my website right now, hit mortgage rates. Okay, right through here. This is going to pop up. This should give you. Let me see. I don't know if the USDA is on here. Usually they're in the realm. Let me just explain how these work. So great question. So let's get over to here. Here's what we have. These are the top products that people usually use. We don't, be honest with you, we usually don't do a lot of USDA loans. I don't think a lot of people understand USDA, but it's a great point. Let me go over what's here on our chart for you. So you can go through here, and this will give you everything that we talk about on a daily basis. All right. So it's going to give you all the mortgage rates. I didn't put USDA on here because it's not a really big product that's out there. It should be, but usually they're right in the realm between here. Here's how all this works. Conventional loans, these are basically just banks. These are banks that do loans and they package things up and sell mortgage bonds and things like that. FHA, VA, USDA, those are all government-backed loans. Okay, so it's a whole different product, whole different set of underwriting, a whole different way of interest rates. And because it's a government-sponsored or backed product, the rates are usually a little bit lower. So if you're looking at USDA, it should be about in this range right through here. But if you're going through here, I'll keep on the channel. So, I appreciate it you asking the question, but let's get over to it and I can show you where to really follow this data. Right through here, this is what's happening in the MBS market, that chart that we follow every day. You know how I say start with the chart? Then the 10-year Treasury. If you don't have access to the MBS, which a lot of people don't, you're going to watch the 10-year Treasury. If that yield goes up, if the rate goes up, mortgage rates are going to go up. If it goes down, mortgage rates are going to go down. Then over through here, what it's doing, it's grabbing the most important economic news of the day that's affecting mortgage rates. Okay, it's going to line them up here and give you kind of what the signals are telling you. You go down through here, this is going to tell you the trend for the day. So today, right now, looking like mortgage rates are getting a little bit lower. You can tune in a little bit later, and it could be totally flip-flopped. So here's our podcast, most recent podcast. Check it out. And then you're going to go down through here. Here's the things that we go over on a daily basis. We go over mortgage rates and things like that, but I also show you, okay, here's what's really happening in the market. Remember when I said, okay, it's a Cinderella story? So here's the markets that we follow. Dow Jones, S&P, and the NASDAQ. Now, we also follow oil because this is a huge factor today. So oil prices are up 1.58%. On a normal market, you'd be looking at the Dow Jones and everything crashing right now, but we'll end with that in a second. We got the VIX. The VIX, this thing right through here, this is the blood pressure. Think of the blood pressure on Wall Street. So as this goes up, anxiety, nerves get more anxious. So then you're going to trade. You're going to be a little more anxious. If this goes down, the markets are kind of chilled out. So at 16, it's pretty stable right through here. Then we look at Bitcoin. That kind of tells me the risk levels on Wall Street. Then you're going to look at the things that the Federal Reserve looks at. But what I added down through here is the poly markets. What's the Federal Reserve going to do at the next meeting? Well, let me get to that. The poly markets are saying they're going to hold. But what do you think they're going to do at the next meeting and meetings after that? Well, we're going to conclude with this here in a second. Let's go through here. The markets are telling us, well, mainstream media is telling us, well, the markets are telling us now that there's a 50% increase in chances of the Federal Reserve increasing rates at the next few meetings. Well, if you go to the CME FedWatch group, it is pretty darn accurate. You go down through here and the June meeting, no. The other meeting, no. The next meeting, no. The next meeting, no. Well, in December, there's a 41% chance that they might hike rates. Well, think about it this way. If we got oil or the Iranian war ending, oil prices go back down, and maybe they don't bring back all the way the 60% gain that they have, but maybe they give a little bit back. It'll bring down inflation, as you see from the charts. So if inflation goes or oil goes down, the prices are going to go down, inflation's going to go down, and yields are start to go down. That's the most common logical outcome of all this. So if we go back to the chart, let's see where we are for the day. And we are up 2. So remember what I said at the beginning of this video? I said I wouldn't be surprised if this gives all of it back because it's a long weekend. We have a long trading weekend. Monday, the markets are closed. Traders are going into this market saying, okay, are we going to strike Iran? Are we not going to strike Iran? So what should we do? They'll come out and tell you what they're, but what are they really going to do? They're going to do nothing. They're going to back out of the market, play it safe, and we'll come back on Tuesday and pick up from there. That's my analysis for the day, and that's where I think we're going to end. So thank you so much. Who do we got here? They helped me with my loan. Great experience. So thanks you, Logan, for joining us today as well. So thank you guys so much for joining me today. I will be back every weekday at 9 a.m. Central, and prayers for my brother-in-law, Mark. You'll be missed, buddy. But we got my one other piece of the note before you guys leave. I got my daughter getting married next weekend. So it's exciting times here at the Frio house. Thanks for watching, folks. God bless. Have a fantastic weekend. And if you haven't seen a loved one lately or you haven't talked to your parents lately, give them a call. If you're nearby, stop by, give them a hug. They might need it for the day. So thanks for watching, folks. God bless. And I will see you Monday. No, I'll see you Tuesday.